Welcome to Tesla Daily News Podcast for February 22nd, 2026. Today, we're talking robotaxi momentum, Cybertruck pricing pressure, and two big developments around Autopilot and full self-driving that investors should not ignore. First up, a federal judge just upheld a $243 million jury verdict against Tesla tied to a fatal 2019 crash involving an Autopilot-equipped Model S. Here's the hook. This is one of the most financially meaningful Autopilot courtroom outcomes so far, and it reinforces legal risk right as Tesla tries to scale autonomy. Context: Tesla's valuation still carries a big autonomy premium. Anything that raises perceived safety, regulatory, or litigation overhang can compress that premium, even if the cash impact is manageable. Details: the judge denied Tesla's request to overturn the verdict. The case involved enhanced autopilot being active at the time of the crash, and the verdict totals about $243 million. Multiple outlets note Tesla is expected to appeal. Impact for investors: in pure dollars, Tesla can absorb a verdict of this size. The bigger issue is precedent and narrative. If more autopilot and FSD cases make it to juries instead of being settled or dismissed, analysts may start building a higher ongoing legal expense line, and the market may demand a higher risk discount on autonomy timelines. Takeaway: watch whether Tesla appeals quickly, how the company frames driver responsibility versus system design, and whether we see any knock-on effects in insurance costs, regulatory scrutiny, or future settlement behavior. Second story: Tesla has updated its full self-driving terms, and the change is subtle but important. Hook: Tesla is signaling that the price and features of FSD can change at any time, pushing the business model further toward a flexible subscription approach. Context: investors want higher margin, recurring software revenue. But customers want predictability, especially when autonomy is sold with long-term expectations. Details: after cutting the one-time, $8,000 lifetime access fee, Tesla's updated language says it can change pricing and what's included. That's consistent with a world where FSD becomes more like a software service than a buy-it-once option. Impact: financially, recurring subscriptions can improve lifetime value per vehicle and smooth revenue. The risk is demand elasticity and trust. If buyers fear future price hikes or feature removals, adoption could slow, and that would hit the software attach rate assumptions that many bull cases rely on. Takeaway: track FSD subscription adoption trends and any future disclosures around take rate. For valuation, software revenue is only as good as retention and customer confidence. Third story: Cybercab is moving from concept to something much more tangible at Giga Texas. Hook: multiple reports say Tesla's Cybercab has been seen in the real world at Giga Texas, including vehicles without a steering wheel and without side mirrors, apparently being prepared for crash testing. Context: robotaxi is a potential platform shift for Tesla. If it works, it changes the revenue model from one-time car sales to high-utilization fleet economics. Details: sightings at the Texas site point to a vehicle configuration aligned with a dedicated robotaxi. Separate coverage also highlights that the first production Cybercab has rolled off the line, and Elon Musk has floated a price around $30,000 and a target timeframe in 2026, with some outlets citing an even more aggressive retail availability goal. Impact: the market will care less about prototypes and more about milestones, regulatory approvals, safety validation, and an actual operational design domain. The upside is massive if Tesla can deploy at scale with acceptable safety stats and high uptime. The downside is that autonomy programs often require remote assistance, and any heavy reliance there can reduce margins and slow scaling. Takeaway: watch for hard evidence, crash test results, permits, pilot program expansion, and verified cost per mile claims. Those data points will move analyst models more than hype. Fourth story: the robotaxi competitive landscape is turning into a price and performance war. Hook: coverage of the broader robotaxi market highlights rising competition and scrutiny of safety performance across fleets. Context: Tesla will not launch robotaxi into a vacuum. Waymo and others already operate in select cities, and pricing pressure can arrive before profits do. Details: reports cite large incident counts logged by competitors over several years, alongside claims of fewer crashes than human drivers. Meanwhile, commentary and reporting around Tesla's own robotaxi efforts emphasize that the industry increasingly depends on remote support and carefully constrained operating areas. Impact: if the market shifts to a price war, near-term margins could be thinner than investors expect, even if long-term total addressable market is huge. For Tesla specifically, a low-cost vehicle like Cybercab plus vertically integrated compute could be an advantage, but only if safety performance and regulatory acceptance keep pace. Takeaway: In the next 12 months, robotaxi investors should focus on unit economics and operational constraints, utilization, downtime, remote intervention rates, and insurance costs. Fifth story. Tesla is cutting Cybertruck prices and adding a cheaper variant, an unmistakable demand signal. Hook. Tesla introduced a cheaper Cybertruck in the United States priced at about $59,990, while also cutting the Cyberbeast by about $15,000 to around $99,990. Context. Cybertruck was supposed to be a high-impact new product cycle. Instead, the market is telling Tesla that the product needs sharper pricing to move volume. Details. Multiple reports characterize the new entry option as limited time, and the cuts arrive amid commentary that Tesla is trying to find buyers for its pickup inventory. Impact. Price cuts can boost unit demand, but they also threaten automotive gross margin, especially on a product that may already have complex manufacturing and lower than ideal scale efficiency. For Tesla, any margin compression can matter more than revenue growth in the near term because the stock is so sensitive to profitability and forward earnings power. Takeaway. Watch inventory and delivery trends for Cybertruck and listen for any management commentary on margin per unit. If Tesla can lower cost faster than it lowers price, that's a win. If not, it's a margin headwind. Sixth story. Tesla's AI hardware story is getting clearer, and it matters for both cars and robots. Hook. New reporting highlights details of Tesla's AI-4 system-on-chip approach, emphasizing redundancy and failover, basically, built-in safety insurance for autonomy and for Optimus. Context. Tesla's differentiation pitch is that it builds the full stack, vehicles, chips, software, and training infrastructure. A safer, more reliable compute platform supports both regulatory confidence and product scalability. Details. The AI-4 design is described as using dual compute modules working in parallel and cross-checking, aimed at fault tolerance. Impact. In the near term, this is more strategic than revenue-generating. But over time, robust, redundant compute can reduce safety-critical failures and could lower costs associated with recalls, warranty, and incidents. If Tesla can standardize the platform across vehicle autonomy and humanoid robotics, that also improves R&D leverage. Takeaway. Autonomy progress isn't only software. Hardware reliability and safety architecture are key to unlocking robotaxi economics. Let's wrap it up. Today's big themes are legal and reputational risk around Autopilot, a more subscription-like and flexible approach to FSD monetization, and real-world Cybercab progress that puts robotaxi back at the center of the Tesla story. For the stock, the tug-of-war is clear: autonomy upside versus safety, legal, and margin pressures, especially with Cybertruck price cuts. For tomorrow, watch for any follow-up on the Autopilot appeal path, more confirmed Cybercab production or regulatory breadcrumbs, and whether analysts start adjusting margin and risk assumptions. If you found this helpful, subscribe to Tesla Daily News Podcast and follow us for your daily, investor-focused Tesla rundown.